Does your insurance have insurance? John Melvin, NBU Agency, your host, Edutainment. What does that mean, does your insurance have insurance? When clients come to us that already have insurance, they usually have term insurance. Now we know that there's only two major types of insurance policies. There's term insurance and permanent insurance. Of course, permanent lasts forever. But term, what that means is your insurance is going to last for a specified amount of years that you purchased at the beginning of the policy. Whether it was a 15-year, a 20-year, or a 25 or a 30-year, it's going to last for those years. The price will be locked in for those amount of years. And when the term is up, when those years are up, you no longer have insurance. Now, some policies out there may say 20-year term to age 95. Now, what that means is you have insurance guaranteed for 20 years. That's locked in at that price. Now, you can keep the coverage to age 95, but you have to pay the additional premiums as it increases every single year. Now, it's going to increase, every single policy is going to increase so much that it's going to be impossible to keep it, so no one would ever do so. But there's three main features that your term insurance should have and that we educate our clients on. And if your term policy doesn't have at least one of the three, you might want to look and see about getting a different insurance policy. The first one is convertibility. Is it convertible? See, when you buy a 20 or 30-year term, we don't know what the future holds. What if in between that time frame, you become uninsurable, where after your term expires, if you would like to extend it or get another a policy, you won't qualify for it. And if that happens, you need to have a backup plan. You need to have insurance on your insurance. When your term is convertible, what that means is any time between the years that you decide, say 20, 30, 15, whatever, anytime between that, you can convert your term policy to a permanent policy. You do not have to take a medical exam. You don't have to answer any medical questions. You can convert anytime. All you have to do is whatever age that you convert, pay the cost of insurance at that age of convertibility. That's it. And you're guaranteed to have permanent insurance for the rest of your life. So you won't never find yourself uninsurable. The second feature that you want to look for is a return on your premium, a return of your money. See, when I sit down with my clients and they like term insurance, they might need it for a certain amount of years. They say, Jonathan, I only need insurance, say, for 20 years. My kids would be out of college, or my kids would be out of the house, our house would be paid off, or, they have different reasons why they need temporary insurance, 20 or 30 years. Well, the key thing is I say, well, over the years, what about all that money that you've paid in? If you paid $50 a month for your term policy, in 1 year, that's $600. In a 30-year time frame, that's $18,000. What happens to that $18,000 after your 30 years? It's gone. You don't see it no more. You can't get none of that back. See, we don't plan to die, we plan to live. So shouldn't your term policy have some type of living benefit for you? Well, if you have a feature that's called return of premium, what happens is you pay $50 a month, every single month, and if something were to happen to you in between that 30 years, the insurance company would pay your family, say, $400,000 tax-free. But you eat right, you put your seatbelt on, you drive safe, you work out, you live to the 30 years. If you live to the 30th year, you no longer have insurance, but all the premiums that you've paid in, that $18,000, is then reimbursed back to you. The insurance company writes you a check for $18,000. So you could have insurance, but does your insurance write you a check if you live? That's kind of sexy. The third feature that a term insurance policy should have or possibly have is a feature where after your 30 or 20 years is up, instead of most policies, your monthly premiums increase. Instead of that happening, your death benefit will decrease. There's certain carriers that we work with where after your term is expired, meaning if you purchase a 20-year term or if you purchase a 30-year term, when the 30 years is up, what happens is your monthly premiums will stay the same. They'll stay level. Unlike other plans, possibly your plan, your monthly premium, if you look in the policy, will increase, and it'll increase so much that it'll be unaffordable. Once your term is expired, let's say 30 years, your monthly premium will stay level, but your death benefit will start to decrease every single year. Now, of course, we know that a death benefit decreasing is not attractive, but it's more attractive than not having insurance at all. Because what if you were paying that $50 a month for $400,000, and once your 30 years is up, you paid 18 grand? Would you like to have that 18 grand be thrown away? Or would you rather pay the same $50 a month and maybe have $250,000 now? Would you rather pay the $50 a month now and have $200,000 now? And the way it's set up is it's guaranteed to never ever go less than 10,000 depending on how many years you live. So it turns into a final expense policy. What we find is most clients will pay all those premiums for many, many years. When they get older and when they really need the insurance to really be there for them, they've had many health issues, many health problems. They have, situations, fixed income, and either the policy is unaffordable at their age or they can't qualify. So when you're shopping around, one of the key things that you want to look for is what type of living benefits does your insurance have? Therefore, your insurance will have insurance. That's my message for this episode of Edutainment. Thank you much. John Melvin, NBU Agency.